Most traders don't realize they've already lost the moment they celebrate their first massive win. You see, there's something the market does that no one talks about. It doesn't just give you money when you win big. It gives you something far more dangerous. It gives you a version of yourself you can't live up to. And that version, that feeling of being invincible, of finally cracking the code, becomes the very thing that destroys you. Not the losses, not the bad trades, but the identity you built around one lucky moment. Let me take you back to a moment you might recognize. You're 3 weeks into trading. You've been watching videos, reading charts, learning patterns. You place a trade. It's careful at first, small position. You follow the rules. The trade goes your way. Then it really goes your way. What you thought would be a $50 win turns into $300. Then $500. Your heart is racing. You close it at $700. You made $700 in one afternoon. You stare at your screen. Your hands are shaking. Not from fear. From excitement. From validation. You think to yourself, I'm actually good at this. That thought. That single thought. That's where the trap closes. Because your brain doesn't process that win as luck. It doesn't see the conditions that aligned. The volatility that spiked. The news event you didn't even know about. Your brain sees proof. Proof that you understand something others don't. Proof that you have a gift. And once that story locks into your mind, everything changes. Not all at once. Quietly. Subtly. But completely. The next day, you open your charts differently. You're looking for that feeling again. Not just profit. The feeling of being right. Of being powerful. Of mattering. You start scanning for setups that could give you another big move. The small, boring trades you planned don't interest you anymore. They feel like a step backward. Why take $20 when you know you're capable of $700? So you wait. You wait for something that looks explosive. And when you think you see it, you take it. But this time, your position size is bigger. Not because your strategy says so, but because your confidence says so. The trade doesn't work. It moves against you. But you don't exit. Because last time, it came back. Last time, you held through the discomfort and it paid off. So you hold. You watch your profit from yesterday shrink. 500, 300, 100. You finally close it at a $50 loss. You're frustrated, but you tell yourself it's fine. You're still up overall. You'll get it back. And that's the beginning. That's the moment the psychological trap fully activates. Because now you're not trading a system. You're trading a memory. You're trying to recreate a feeling. And every trade that doesn't give you that feeling starts to feel like failure, even if it's a win. A $30 winner feels empty. A $50 winner feels pointless. You start thinking something's wrong. The market's different. Your strategy's broken. You're losing your edge, but nothing's different. Except you. See, humans aren't wired for slow, steady progress. We're wired for drama. For moments that feel significant. That's how our brains survived in the wild. We remembered the big events. The lion attack, the successful hunt. The moment of danger or triumph. Everything else faded into background noise. And that wiring is still with us. When you make $700 in one trade, your nervous system lights up like a firework. Dopamine floods your brain. Your body remembers that intensity. It craves it. And when trading becomes calm, controlled, boring, your brain interprets that as nothing happening. But that's a lie. Consistency is happening. Growth is happening. Just not in a way your emotions can feel. This is why small consistency beats big wins. Not because small wins are impressive, but because they train your brain differently. When your wins are small and controlled, your nervous system stays calm. There's no spike, no euphoria, no story about who you are. Just a result. And when losses are equally small and controlled, there's no panic, no despair, no identity crisis, just another result. Over time, this creates something most traders never develop: emotional neutrality. And emotional neutrality is the single most powerful edge you can have in trading. Let me show you what this looks like in real time. Imagine two traders. Both start with $5,000. Both have similar strategies. Trader A makes 10% on his first trade. $500. He's ecstatic. He tells his friends. He feels like a professional. The next week, he's looking for another home run. He finds a trade that looks perfect. He risks 8% this time. Not because the setup is better, but because he feels confident. The trade fails. He loses $400. He's frustrated, but he's still up overall. He takes another trade. Bigger position. He needs to make it back. It fails again. Now he's down 200 from where he started. But worse than the money, he's lost the feeling. The identity. He thought he was special. Now he's questioning everything. Trader B makes 2% on his first trade, $100. He doesn't tell anyone. He records it in his journal. He follows his plan. Next trade, same risk, same process. Another 2%. Then a loss, 1% down. Then another win, 2% up, flat trade. Small loss, small win. After 6 weeks, Trader A is either blown out or emotionally exhausted. He's switched strategies twice. He's revenge traded. He's frozen in fear. Trader B is up 11%. Not because he's smarter, because his emotions never got involved. His identity was never attached to any single outcome. He measured success by following rules, not by what his account did in one day. That difference is everything. Here's what most people don't understand about compounding. They think it's about numbers, math, percentages. But compounding is actually psychological. Because the real question isn't whether small gains can grow. It's whether you can stay consistent long enough to let them. And most people can't. Not because they don't understand compounding, but because it feels too slow. It feels like nothing's happening. And when nothing feels like it's happening, the mind assumes you're failing. I remember a trader I spoke with months ago. He'd been trading for 2 years. He said he understood risk management. He knew about compounding. He'd read all the books. But he kept blowing accounts. Small ones, but still. I asked him to show me his trading journal. He pulled it up. I looked at his last 30 trades. 22 of them were profitable. His win rate was over 70%. I said, "You should be making money." He nodded. Then I saw it. His average winner was $35. His average loser was $220. He was risking everything on trades that felt important and taking profit early on trades that felt boring. I asked him why. He paused. He said, "I don't know. The small wins just don't feel like progress." And there it is. The small wins didn't feel like progress. So he dismissed them. He abandoned them. He chased the big ones. The dramatic ones. The ones that would prove he was good. And in doing so, he destroyed his own consistency. Small consistency beats big wins because big wins are unrepeatable. You can't rely on them. You can't control when they happen. You can't force the market to give you explosive moves. But you can control your risk. You can control your position size. You can control your rules. And when you control those things, you create an environment where compounding is possible. Not guaranteed, but possible. And possibility is all you need when you have enough time. Time is the real multiplier, not intelligence, not strategy, time. But time only works if you survive long enough to use it. And survival means staying small, staying controlled, staying consistent, even when it's boring. Especially when it's boring. Let's talk about what happens inside your mind when you start choosing consistency over explosions. At first, it feels like a downgrade. Like you're playing it safe. Like you're not really trading. You see other people posting screenshots of massive wins. 50% days. Account doubles. You look at your 2% gain and feel embarrassed. You think, what's the point? But here's what you don't see. You don't see their losses. You don't see the weeks they didn't post. You don't see the revenge trades, the over-leveraging, the emotional chaos. You see the highlight, and you compare it to your reality. That comparison is poison, because what looks boring on the surface is actually building something those explosive traders will never have. Structure. A foundation. A system that works in all conditions, not just the perfect ones. When you trade small and consistent, you're not just protecting your account. You're training your nervous system. You're teaching your brain that trading doesn't have to be emotional. That profit doesn't have to feel dramatic. That success doesn't have to validate your identity. This is the shift most traders never make. They never separate their self-worth from their results. So every trade becomes personal. Every loss is a failure. Every win is proof they're worthy. And that connection between outcome and identity creates a cycle of emotional trading that's almost impossible to break. Consistency breaks it. Not by force, by replacement. It replaces emotional intensity with emotional stability. It replaces identity with process. And over time, that stability allows you to see clearly. You stop reacting to every candle. You stop chasing every move. You stop panicking during normal drawdowns. You start thinking in probabilities instead of certainties. And that shift in thinking is what separates professionals from everyone else. Professionals don't feel much when they trade. That's not because they're cold or detached. It's because they've trained their emotions out of the process. They've done it so many times, followed their rules so consistently, that the act of trading has become boring. And boring is exactly where mastery lives. Let me tell you what happens after 6 months of small, consistent actions. Your account isn't dramatically different. Maybe you're up 15%, maybe 20%. Nothing that would impress anyone on social media. But something inside you has changed. You don't check your account compulsively anymore. You don't feel anxiety before placing a trade. You don't celebrate wins or despair over losses. You just execute. You follow your plan. You track your metrics. And slowly, without you even noticing, your confidence shifts. It's no longer based on outcomes. It's based on execution. That confidence is unshakable. Because it's not tied to being right. It's tied to being disciplined. And discipline is something you can control every single day, regardless of what the market does. This is why small consistency beats big wins. Because big wins give you fragile confidence. Confidence that depends on conditions. Confidence that collapses when things go wrong. Small consistency gives you durable confidence. Confidence that survives bad days, losing streaks, and flat periods. Confidence that doesn't need external validation. And in trading, durable confidence is the difference between lasting 1 year and lasting 20. Now let's talk about the biggest misconception around all of this. People think consistency requires superhuman discipline. They think you have to be motivated every single day, that you have to love the process, that you have to feel inspired. None of that is true. Consistency doesn't require motivation. It requires design. You don't build consistency by trying harder. You build it by making the right action easier than the wrong one. Here's what that looks like practically. You don't rely on yourself to remember your rules under pressure. You write them down. You create a checklist. Before every trade, you check it. Risk size, check. Entry criteria met, check. Stop loss placed, check. You remove the decision. The checklist decides for you. And when decisions are removed, emotion has nowhere to go. You don't rely on yourself to stop overtrading. You set a daily limit. 3 trades maximum. After 3, the platform closes. You can't break the rule even if you want to. You've designed the rule into your environment. Same with risk. You don't trust yourself to keep risk low when you're feeling confident. You automate it. Fixed percentage. Every trade. No exceptions. The system doesn't care how you feel. It executes the same way whether you're excited, scared, or bored. This is what professionals do. They don't out-discipline everyone else. They out-design them. They build systems that make consistency the default, not the exception. And once those systems are in place, the hard part is already done. You just follow the structure. Day after day, trade after trade, without thinking, without debating, without second guessing. And here's the beautiful part. Once you've been consistent for long enough, something shifts in how you see the market. You stop looking for the perfect trade. You stop needing to be right. You start seeing trading as a probability game. You understand that any single trade means nothing. It's just one data point in a series of hundreds. Some will win. Some will lose. But if your process is sound and your risk is controlled, the overall curve bends in your favor. That understanding removes so much pressure. You don't have to predict the future. You don't have to outsmart the market. You just have to show up, execute your plan, and let probability do the rest. And probability works. Not every day. Not every week. But over time. Always over time. Most people never get to experience this because they quit during what I call the silent phase. This is the period where you're doing everything right, but nothing exciting is happening. You're following your rules. Your risk is controlled. Your trades are small. But your account looks flat. Maybe you're up 3% over 2 months. Maybe you're down 1%. It doesn't feel like progress. It feels like stagnation. This is the phase where amateurs quit. They interpret the silence as failure. They think their strategy doesn't work. They think they're wasting time. So they switch. They try something new. Something that promises faster results. And in doing so, they reset the entire process. They never give consistency enough time to compound. Professionals know the silent phase is normal. They've been through it before. They know results lag behind effort. They know the curve doesn't move in a straight line. So they stay. They keep executing. They trust the process even when there's no evidence it's working. And then, without warning, something shifts. The account starts moving. Not because they changed anything, but because they stayed consistent long enough for the math to catch up. That moment, when the curve finally bends, doesn't feel dramatic. There's no fireworks, no sudden breakthrough, just a gradual realization that things are working. Drawdowns are smaller. Wins are more frequent. Confidence is steady. And that steadiness, that boring, unremarkable consistency, is what allows real growth. Here's the truth most people don't want to hear. Big wins feel good, but they don't build anything. They're moments. And moments fade. What lasts is behavior. Behavior repeated under all conditions. Under uncertainty. Under pressure. Under boredom. That's what builds a career. That's what builds an edge. That's what separates the traders who make it from the thousands who don't. You don't need to be the smartest person in the market. You don't need to predict the future. You don't need to catch every move. You just need to be consistent. Boringly, unremarkably consistent. And if you can do that, if you can show up and execute your plan when no one's watching and nothing exciting is happening, you will outlast everyone who can't. Because most people can't. Most people need feedback. They need validation. They need to feel progress. And when they don't get it, they leave. They move on to the next thing, the next strategy, the next promise of quick success. But if you understand what I'm saying right now, you can choose differently. You can choose to stay. You can choose small, controlled, repeatable actions. You can choose process over outcome, and you can let time do what time does best. It multiplies. Small consistency beats big wins, not because the wins are bigger, but because the consistency never stops. It survives bad days. It survives doubt. It survives the silent phase. And when everyone else has rotated out, when the excitement chasers have moved on, consistency remains. Quiet, steady, compounding, that's the game. That's what separates those who last from those who don't. It's not talent. It's not luck. It's the willingness to stay boring, to stay small, to stay consistent, even when no one notices, even when nothing exciting is happening, even when your brain is screaming for drama. You ignore it. You execute. You trust the process. And over time, the results take care of themselves. That's how small consistency beats big wins. Not by competing, but by remaining.